Welcome back to the channel, everybody. My name's Artie with CoinCasso, and in this episode, we go over the top news articles written in the last 24 hours so that you guys can stay up to date and informed on everything going around in the cryptocurrency world. So the Bitcoin halving happened just 10 hours ago. Let's jump into the news and find out what's going on. This first article is titled, Bitcoin halving arrives. Mining reward drops for the third time in history. Bitcoin's third halving, the network's quadrennial landmark and the most anticipated event this year in cryptocurrency industry, has finally happened. Miners racing on the network to compete for freshly minted Bitcoin produced the 630,000th block at 7:23 p.m. UTC on May 11th, which triggered the programmed halving event, marking another milestone in the currency's 11-year history. The first block in the new 6.25 Bitcoin per block mining cycle was mined and relayed by China-based Antpool, the fourth largest mining pool by total computing power. The immediate implication after halving is that the newly minted Bitcoin in a day will fall from 1,800 to 900 units. That would also mean operators will see their daily total revenue at Bitcoin's current price of 8,600 reduced from 15 million to 8 million. As such, it has been expected the computing power connected to the Bitcoin network will fall significantly after the halving, as the revenue decrease will squeeze out those miner operations that lack efficient resources to cut their electricity costs. However, it remains to be seen how this will play out after the halving. Currently, the average Bitcoin total computing power over the last 7 days since the previous mining difficulty adjustment has hit an all-time high of 121 exahashes per second, beating the previous record of 118 exahashes per second. Now, I'm going to follow Bitcoin mining very closely over the next week because I'd like to see how many mining farms actually close down because they're no longer profitable. Many of the larger farms have actually anticipated this and have gone to different forms of energy consumption, including solar. But I think the most interesting point is that every single day before this halving, there was 1,800 Bitcoins released onto the market every single day. Now there's only going to be 900. Obviously, there's still going to be buying and selling of people that already have Bitcoins, but the new Bitcoins injected into the market is going to be cut in half, dramatically reducing the supply. So I'd like to see what happens over the next few months, and I think that Bitcoin is actually going to start rising up due to the lack of supply and the increase in demand. And onto our second article of the day, which is titled, Where Does Bitcoin Go After the Halving? Bitcoin's long-anticipated halving event took place Monday afternoon. At the time that it took place, Bitcoin was trading below its 10 and 50-day moving averages, bearish technical indicators after a huge 10% drop in price on May 10th. This was triggered by an outage striking the San Francisco-based exchange Coinbase. Traders are anticipating unpredictability in Bitcoin's price for the short term, and therefore volatility is expected. They say we don't have a big sample size of the past halvings, but they generally have a positive impact on sentiment after a short-term period of volatility. The anticipation of the halving has contributed to the outperformance by Bitcoin over the past few weeks, and that a breakout greater than $10,055 is likely to unfold after a few weeks of choppiness triggered by today's gap. Now, if you watched my previous video on my Bitcoin price analysis, you heard me talking about the bull and bear runs with a slight correction afterwards, followed by the subsequent bull and bear run. Right now, over the next week, we should see some choppiness, but then a nice upwards gain. That's my prediction, and it could be completely wrong, but I'm optimistic about where the price of Bitcoin is going to go after this halving. And onto our last article of the day, which is titled, Bitcoin's 8% drop triggered largest liquidation on Bitmex in 2 months. Bitcoin fell sharply on Sunday, triggering the highest short-long liquidation on crypto derivatives exchange Bitmex for the past 2 months. The top cryptocurrency by market cap fell by over 8.5%. Its biggest single-day drop since March 12th, when prices crashed nearly 40%. The decline would have been much bigger had prices remained at the session's low of $8,100 instead of recovering to the $8,700 mark. The cryptocurrency fell from $9,560 to $8,100, catching most traders off guard and forcing as much as $278 million worth of futures liquidations on Bitmex. That's the highest amount since March 13th, according to the crypto derivatives research firm Skew. They say that Bitcoin was already overdue for a pullback. Technical indicators began signaling that the asset was overbought last Friday, when as many as 85% of all wallet addresses holding Bitcoin halving already made a return on their investment ahead of the halving event. However, most observers were optimistic a temporary price drop, if any, would be seen after the halving. Also, traders were hedged against the risk of a potential price pullback, as evidenced by the uptick in the demand for options over the past few weeks. The pullback, however, had come early and could be extended further to $7,000. They say there is room for the price to go higher as leverage seems to have come out of the market. In the short term, we believe $10,000 is a psychological importance level for Bitcoin. If we can sustain a price over $10,000, we will see increased confidence in the market. Like I've been saying, this $10,000 mark is a huge important level with Bitcoin. We saw it hit that and it got rejected and dropped back down substantially. If we pass that threshold and trade above the $10,000 mark for any amount of time, I don't see why 12,000 isn't a high possibility in the near future. Again, I think that's going to be a huge rejection point and it will drop back down, but it will not fall below 10,000. So if you're planning on day trading, that might be a nice range to keep an eye out for, but always do your own research and invest your own money at your own risk. And that's it for the news, guys. I hope you guys enjoyed this episode. I hope you got some value out of it. Please don't forget to like the Facebook page, subscribe to the YouTube channel, share this video, make sure to hit the notification bell to get notified every single time we upload a new video, which is every single day, Monday through Friday. Thanks for watching, everybody, and we'll see you tomorrow.